What's good, y'all? It is HB with Punch and Profit, January 17th, 2025. We are going to break down the price action of the NASDAQ this morning. If you want to see my live execution in a My Funded Futures account, you can click on the link in the description below or wait for the video card to pop up in the breakdown. But before we get to it, like the video, comment down below, subscribe if you're new. It helps the channel and it helps me find the time to share with you this content to help you get funded or build your own account. So, first things first. Well, actually, before we get into that, we are going to break down all the clean trades that were presented today. We'll start with the one trade that I took, and then we're also going to talk about what to do when you get caught up in a range that is almost like seek and destroy, because that happens pretty frequently throughout the week, right? Where you find yourself in a range and it's kind of seek and destroy. Wasn't very long today. This was just a brief pullback and it chopped for a little bit, but then we moved on back up. But we'll get into that and kind of give you the reasoning to why I keep my stop losses at a swing low or a swing high, why that can be beneficial, even though if you're not over leveraged, it can be a little bit weird having a massive stop loss. But like I said, we'll get into it. We'll start with the trade I took today. I was one and done, and I love days like this where you can get in and get out, especially on a Friday, to where you don't want to have a bad weekend because you took a bad trade. But first things first, higher time frame, we're bullish. When I say that, I'm bullish at the moment. When I'm seeing the swing low develop, okay, I'm waiting for a signal. And if that signal is clean and it presents itself, I'm going to place my buy order, okay, anticipating that I can at least hit a certain level, okay. So higher time frame, I'm bullish. This happens at the 9:30 opening, and this is a little bit of an advanced trade right here, and I'll break down why in a second. But we get our inversion, and we're also going to go into the nitty gritty details, okay, on how to identify these fair value gaps overlapping each other. So we get our first bearish fair value gap right here within this time period near the 9:30 opening. 1, 2, 3. Okay, so roughly about there. Now we're going to extend that over to see where we get the overlap. We get our bullish fair value gap. 1, 2, 3. Now, why is this a bullish fair value gap when the wicks are intersecting each other? Because you have a volume imbalance. I don't care what you call it, a fair value gap, a gap, call it whatever you want. Okay, it still works. So take into consideration that volume imbalance, and you have a gap. You take it down to this wick, change this to green, and that's where the overlap occurs. And to show that an overlap happened, we will mark that in an orange box roughly where that occurred. So we'll delete that. Okay, so we get our inversion. We get our advanced market structure shift right here. Now, this wouldn't have worked out if you placed a limit order, right? And it tapped back and you just got blown out. Remember, at the 9:30 opening, I'm usually placing a buy or a sell stop because I know, and I would recommend if you're new not to trade the opening, okay? Because it can be very volatile. Things happen very fast, and it could just blast you. But this was a little bit of advanced trade. I put a buy stop. I was confident in my higher time frame analysis, looking at the daily, the 4 hour, the 1 hour. And I'm thinking I want to get tapped in because usually at the 9:30 opening or almost when we're about to open, things get volatile, things move fast. There's not going to be this moment that we tap back in and retrace into the limit order, and then it's not going to happen like that. Things can get very, very volatile. So I placed a buy stop instead of a limit order. It went right through, took me up for a 1-to-1, and it worked out very nicely. Sometimes you won't see me place stops on some of my trades, and the reason I do that is because I use a mental stop sometimes, or a take profit. I like to feel the market out and kind of adjust it as I feel what's happening with price action. It's up to you. That's just my style of trading. Sometimes I will have hard stops and hard take profits. I went for a 1-to-1. I made a little bit more than this in the live execution. And one thing you can do, there's a benefit to keeping your stop this low, okay, at this swing low right here that the mouse is pointing at. There's a benefit to keeping at the swing lows and swing highs if you're not over leveraged. Say I'm using 1 micro. I will break down later why it can be beneficial to have those stops at the swing highs or swing lows of these inversions and advanced market structure shifts. But when you get more advanced, if you want to take it a different approach, you can start to tighten up that stop loss. Maybe you decide to keep it above or below the inversion. In this case, it would be below. In this case, it would be above if I moved it right here. Or maybe you even want to keep it a few points away from the advanced market structure shift. Find what works for you, except that if you tighten that stop loss, you're going to lose more trades. But as long as you honor, okay, your risk reward, maybe you say you want to aim for, let's say in this case, let's say 5-to-1s. You want to aim for 5-to-1s, okay, and you want to keep like a 5-point stop, or let's say a 10-point stop, and you aim for, you want to aim for, or let's go something more basic. You're always going to aim for a 2-to-1, right? You're always going to aim for a 2-to-1. You're going to have a 10-point stop, or you're going to have the stop slightly above the inversion. All right, you may lose more trades, but overall, in the long run, if you honor the trade and the risk to reward, it will play out in your favor. Okay, and I'll break down later why it's beneficial to keep your stop at the swing high or swing low. It's also beneficial for newbies, right? Because at first you want to give your trades a little bit room to breathe, in my opinion, when you're first starting out, so you can see what happens, see what's going on. Because when you get stopped out of a trade, usually that flusters you and you stop paying attention to price action, or you blew your account because you over leveraged, and it turns in, you want to be invested in that trade when you're first starting off, in the sense that you're trying to learn price action. When you're first trading, it's not even so much about making money as much as it is experimenting. At least it was for me. So when you have that big stop loss, you can kind of figure out, okay, what happens when it gets into the gap? What happens when it hits the inversion? What happens? You can break down all these scenarios. There's a benefit to having that swing high and that swing low, or putting your stop at the swing high and swing low, letting your trades breathe, but you cannot over leverage. You have to only do like 1 micro. That's 37-point stop, right? But that's like what, $80 with 1 micro? Not a big deal. You'll be all right. Okay, and the trade would have played out in your favor. So, but if you want to, you can keep a tighter stop. Just accept you're going to lose a little bit more, but you'll get very nice risk to rewards. Okay, you can aim for lots of different things. You can aim for points, low hanging fruit, right? 2-to-1s, risk to rewards, whatever you want to do. Okay, so that was the first trade, and I'll keep these right here for the next one. Now, because I was bullish, I did not take this trade, and on top of that, I made my money for the day. There was no reason for me to take this trade, especially on a Friday when you got the weekend coming up. Don't want to make things difficult. Okay, another volume imbalance in here, bullish fair value gap, so we got to cover that volume imbalance. We'll make this green. Okay, then, so 1, 2, 3, bullish, 1, 2, 3, bearish fair value gap. Overlap each other, no volume imbalance on the bearish fair value gap. Okay, that's where your overlap occurs. We're going to take these off. Okay, put our orange box to summarize where the inversion roughly happened. Okay, tighten that up just to clean it up a bit. We get our advanced market structure shift right here. In this one, most of the times you want to wait for a candle close and wait for it to retrace back into a limit order, right? You don't want to usually put buy stops or sell stops. Unless you're advanced and you know what's going on. I would recommend wait for the candle close. That gives you confirmation, and wait for the retracements. Another thing you're going to have to accept, if that's the approach you take, sometimes you're just going to miss it and it's going to run without you. It is what it is. Can't have it all. Okay. So there you go. we get that. And if, now, let me show you, even with this ridiculous, putting your stop at this swing high, at this ridiculous swing high, 87 points. If you're using one micro, that's like what, 180, $60, 60 to $80, maybe 200. You still get a nice one-to-one. Okay, if you're gonna have a stop that big, you might as well aim for a modest one-to-one, right? Now, I wouldn't have put my stop that high. I would have been like, okay, I'll put it just above the inversion or just below it or a few points from the advanced market structure shift. And look here. Let's say you put it a 10-point stop or a 12-point stop, whatever you want to do, right? 10-point stop. Look at this risk to reward. It offered you all the way up to a possible 10, but look at that risk to reward. You're going to get another 5-to-1. Let's say you went for a 5-to-1. Okay, very nice. Boom. Little to no drawdown, not even a point of drawdown. So even with that big stop, you didn't have to deal with any drawdown. So that was the other trade. Keep that there. Then we had a nice clean trade right here. Okay, this is one I would have took if I didn't get in on that first trade. We have a bearish fair value gap right here. Okay, let's highlight that. 1, 2, 3. Overlapped by bullish fair value gap. All right, and I apologize. My son is just eating eating too much candies and sweets. She's hyped up right now, making a lot of noise. Okay, you get your advanced market structure shift, and we're going to get our orange box to summarize where that inversion occurred. So let's get rid of those. You saw where it overlapped. Inversion, advanced market structure shift, little to no drawdown. Let's say, okay, we're going to aim. We always going to start. What happens if we kept our stop at the swing low? Would it have given us a 1-to-1? Obviously it did, all the way up to 2 plus, right? So you get a 2-to-1 and more. Now let's say we wanted to move our stop up below the inversion. Okay, now it really gets good. Above the inversion. Maybe let's say 10 points from the advanced market structure shift, or 8 points. Let's say you put 8 points, right? Very nice risk to rewards. Okay, but like I said, say you went 5 points in this case from the advanced market structure, you would have gotten stopped out and missed out on all that. So you have to accept you're going to lose some trades. All right, so that occurred. Another nice trade. Now, and that occurred during the silver bullet hour. Now, let's talk about when you get caught up in a rangy session or day, or just price action in general, right? Like, this wasn't that bad. It only lasted temporarily. But there are days, you guys, as we know, where it's choppy, it's seek and destroy, and it's doing that for the whole session, or predominantly throughout the session. This is a perfect example. Okay, so right here we're at the 950 macro. You get a perfect balanced price range, what it looks like right here. Inversion, right in here. Change that orange. You get an advanced market structure shift, but it's not a pretty one, right? This is not a clean setup, because could the advanced market structure shift be here? Could it be here? It's kind of hard to identify. When it's hard to identify, you should know it's probably not a good trade, right? It's probably not a good trade. There's always another opportunity. If it's unclean and it's choppy like this, you should probably stay out. But let's say, man, it's 950 to 1010 macro. Man, that's a nice balanced price range right there. Kind of hard to identify the advanced market structure shift, but you know what? I'm going to go for it. It's happening during a macro. And another thing to help you stay out of a trade, if you get like a faint candle close, like that's barely closing over the advanced market structure shift, and it's kind of chopping down, you don't really want to be in that. That's kind of a signal that it's not going to make that big run with low resistance as you think. So when you get that, beware. Okay, try to stay out. But let's say you jump in anyways. Okay, This is the beauty of having that stop at the swing low or swing high. Okay, let's say you put your stop at the swing low, which is right here. All right, and let's say you're gonna aim for a modest 1-to-1. Now, once you get entered in here, because you believe that was a good enough candle close, you get entered in, you get this nasty pullback. Okay, and this is why it's important not to over leverage. That's about 15, 20 points of drawdown you have to deal with. Now, once you see this, you got a clean signal, you got somewhat of a candle close, and you get dealing with all this drawdown. Be confident in this low, because most of the times it will hold, but it will not hold for long. It will hold long enough for you to break even or take a small little profit, which you could have gotten. So you get entered in here, you start taking drawdown. When you get this pullback like that, that means it's either going to be high resistance or the trade is just not going to work. Okay, but be confident in this low. It will hold. So you might be panicking as it's pulling back right here. Like, oh crap, man, this is not the way. This is not low resistance. This is getting choppy. Hold the trade until you can break even, or one thing I do is like I'll aim for anywhere from 10 to 25 points. It offers 10 right here. You can go for 15, you can go for 25. For me, I aim for 10. That's a modest enough, and you're going to come out with the W even though you placed a bad trade. Now, a lot of people don't like to do that because you're going to have to skew your risk to reward, right? Okay, you realize you're in a high resistant trade. Man, you're going to have to skew your risk to reward, hold on to it, hope in hopes to make 10 points. That's going to be something up to you. For me, it's just worked for me, and I got used to reading price action like that. When I'm in a trade, I get the signal, I get the advanced market structure shift, but it's not running the way I like. I hold until I get a break even or I get a modest 10 points. And that's the beauty of holding in a choppy price range, is once you see that it's not low resistance and it's pulling back, you're dealing with serious drawdown. Okay, I'm going to hold until I break even or get a small little target. Or you can just close the trade out. Or like I told you earlier, keep a tight stop loss. If I kept it just above the inversion, I would have gotten stopped out. That would have been that, and that's just a loss. It is what it is. You wait for the next trade. But usually when you get a nice signal, and in terms of an inversion, and you get an advanced market structure shift, it's not the pretty one, but it is an advanced market structure shift. That means you might be stuck in a little bit of a choppy seek and destroy range, and you should probably wait before you get back in. But let's say you just want to take every signal you get, because right here we're still within the 950 1010 macro. You get another signal to the downside, and that's why it's really important to know higher time frame bias, because if you know it, you probably don't take that sell. But let's say you do take it. Okay, you do get an inversion right here, or an overlap of a bullish fair value gap and a bearish fair value gap. You get an advanced market structure shift eventually with this long candle. You get the candle close, right? This isn't, but you should know, because this was bad, that in seeing this messy signal, because this is not a clean signal. It wasn't clean like this one or this one or this one, and it's low resistant and it's moving towards its target. You should know that this probably ain't the right trade. It may move in your direction for a little, but you should know it's probably not the right trade to be in. But let's say you're impulsive, you take it, you keep your stop at the swing high, which was right here where the inversion occurred. This is the beauty of having that big stop loss, as long as you're not over leveraged, that is. Okay, you get tapped in, or you wait for the retracement back, and you're like, okay, this is not moving great. Okay, it's very choppy. This is not a clean trade. You're just realizing it. Okay, I'm going to keep my stop up here. As soon as we get tapped in, I'm aiming for my 10 points. Right here, if you aimed for your 10, you would have gotten out alive. 15, you would have gotten out alive. 25, you would have gotten out alive. Like I said, 10 to 25. Anything past 10, you're pushing it, right? But it usually can hit those targets, all right, as long as you keep your stop up there. Okay, and maybe if you want to, you can adjust that. But to keep it simple, that's the beauty of keeping your stop loss at these swing highs and swing lows. If you find that you're in a high resistant a trade, or you're in a trade to where you're kind of chopping, it can give you some time to get out of that trade with a W, a small little W, or at the very least a break even if you're calm and you're composed. If you're freaking out while it's pulling back, then I don't know what to tell you. But if you're calm and composed and you recognize it, like, this is very high resistance, choppy price action, I'm gonna let it hold, and then see if I can get a break even, or even get out. And let's say it's just one of those days where the range is just going all up and down, right? It's taking out highs and lows back and forth. You're just gonna have to accept the fact that you're gonna have to take a L, right? As long as you're not over leveraged, it's not that big of a deal with one micro, right? If you're putting 5 whole minis on, well, good luck. So, or even one mini. So just don't over leverage, and that is the beauty for newbies or people transitioning to this strategy. Keeping that stop at the swing high, swing low can kind of give you the ability to practice and see how to deal with these trades when they're very high resistant or they're chopping on you. But it's up to you. Or you can just keep a tight stop loss, right? And let the odds play in your favor over the long haul. But you also have to let your winners run. So this is HB, Punch and Profit. Comment down below, like the video, subscribe if you're new. Peace.